I just want to warn you the collapse of US dollar is coming. And I want to warn you that the collapse of Bitcoin and crypto is probably coming, right? I don't mean right now, but I'll show you when it's going to happen. This chart tells us when it's going to happen. So basically, Bitcoin has been tracking M2 in the United States. That's the total amount of money being printed in United States, right? We all know that the more money you print, which is the green line, right? That's measured by US global M2, not just US, global M2, including China, Europe. The more money you print, the higher Bitcoin goes up, right? The higher Bitcoin goes up. And right now, this chart started in 2023. And if you were to map this chart out over the last 12 years, it's probably true to a large extent as well, because Bitcoin is supposed to hedge against printing of money. And we see it working. We always see this chart being used in the media a lot. But why has it stopped working lately? That's the important question I'm going to answer for you folks today. Plus, the question of what is happening to Bitcoin right now as it's bouncing off this key support line. If it breaks this, it could be really bad. This is what I've been warning about. So 2 questions today. A long-term question, right, about what happened to Bitcoin? How come Bitcoin is not protecting us anymore when governments around the world are just printing money like crazy, right? What happened here? What is sucking all that liquidity out? Because that money is going somewhere, right? And it's not being reflected in Bitcoin. Has Bitcoin stopped working? Bitcoin should be up here, right? This was when Bitcoin was around 40,000. This is Bitcoin now at 112,000. And by the correlation, if it follows this green line up, Bitcoin right now should be at $250,000. But it's not. Instead, it's less than half of where it's supposed to be. What happened to the blow off top in Bitcoin? I have a very, very definite answer for you folks. I'm not just jerking you around. I will answer exactly what happened and show you what is going to happen in the next 3 years. Brace yourselves. Brace yourselves. Give you one more clue what's happening. This is the largest hedge fund manager in the world, right? He actually founded the company. He didn't just manage it. He's the founder of Bridgewater. Ray Dalio warns, we are heading into very, very dark times. And he actually aimed that at United States and UK audiences. He said to the people of UK, people of United States, right? Maybe he meant Europe as well. We're heading into very, very dark times. And the solution, he says there is a solution, comes from a Chinese proverb, which says a smart rabbit has 3 holes, right? As they say in China, 狡兔三窟, 狡兔三窟, which means a smart rabbit has 3 holes. He's got a whole underground network that he hides in. If the fox or the huntsman, or the hunter, blocks off one of the holes, he'll just run off, collect his whole family, and come out the other hole, right? Most people think there is only one escape hatch, and that's Bitcoin. That's what most people think. Well, Pablo's been trying to tell you guys there's more escape hatches. There are at least 3 holes, according to Ray Dalio. That's what we're going to talk about today. First, let's have a look at Bitcoin. So what I've been saying, if you look at my yesterday's video, when Bitcoin was up here, right, was almost forming a bottoming tail around 113K, I said, I don't trust this. I said, I think we're going to tap at least, right, this major support here, bounce off this major support here, at least for a technical bounce. If not, we will even wick down to 109K, like here. So today we bounced off. 1 day later, we bounced off this major technical support, but it could be a bounce. I can't for sure know if this is for real or not yet. Why did I say this level? Well, because one, this is the top of this blue descending channel, right? In my market in blue. How do we know this is a real level, not just an imaginary line? Because we've seen like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, like 14, 15, 16, 17, 18, 19, 20, 21. There's been like 21 times in the last 2 months. Bitcoin has either butted against or bounced off this line, right? And if you say, oh, well, it's you could draw that line randomly anywhere. Then there's also this other line, which holds this entire Bitcoin structure, right? Both of them cross over at this level. So I said, hey, look, this is going to be a pretty important level for us to bounce off, which is 110.9K area. If this bounce doesn't work and we pull back for one more time, then I do think we wick down to something like low 110K, even 109K, wick through this red line and then bounce, right? I think there's like a 40% chance this is the real bounce, and there's like a probably 50% chance that it's not, therefore we wick through and then bounce. As you know, that adds up to 90% probability, and then the last 10% left over is that we break down. So I give it a 90% chance we bounce up, right? Whether this is the real candle or not, I'd say 40% and 50% chance we wick through and then bounce up, right? Probably lows at 109K. If not, we've already hit the low at 110K. And 10% probability we break down here. There's lots of reasons for this. I already explained it in my video yesterday. I gave very detailed explanations, and also explained in my Discord as well. It's got something to do with this guy called CZ, who's the founder of Binance. And with this shoulder pattern, I was the first one to call it, to say if we break down here, that's going to be huge problem. Right now, I am leaning towards this is not a regular shoulder, because you have a massive shoulder here and a very small right shoulder here. So for now, I don't think that's a valid theory. I think we bounce 90% chance, never 90% chance. But what is holding Bitcoin back? What is sucking all the liquidity out? Before we answer that question, first let's answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses this exchange that's non-KYC. That means you don't need to show your ID. That means the exchange can't even see who you are. That means the IRS can't see you. The tax office can't see you. The FBI, CIA, nobody can see you. Total privacy. That's why Pablo made this deal with them, right? To win this exclusive prize just on the Pablo He-Man link, only on the Pablo He-Man link, to win up to $120,000, up to $120,000. And as we can see, right, there's 20% bonus just by depositing. Yeah, deposit $100 get $20. Deposit $1,000 and get $200 bonus. You get the idea. And just by being the top 30 of this competition, you get to win a prize. And top 30 of the Pablo competition. It's not an exchange-wide competition. Once again, it's exclusive to Pablo competition, right? Exclusive to this link, but limited time only. October 16th is the end, folks. October 16th, so limited time only. And if you're watching this on YouTube right now, then the link is in the description below. The link is in the description below. But if you're watching this on any other platform, that's okay. Just click on my profile page, and then there's my link tree or stand link. And when we click on that, it should be the first link that pops up. Okay. Let's get back to the markets, folks. And remember, this deal is only on the Pablo He-Man link. Only on the Pablo He-Man link. So we've explained this situation in Bitcoin. And usually, as I said yesterday, there's what they call Uptober, because September tends to be a down month for Bitcoin. As we saw here, and October, chances are we break up, right? Chances are we break up for one more leg. Now, how do I answer this question? How do I answer this? What is causing this gap? What is causing this right now? Folks who are in my Discord probably already know the answer already. For folks in the who are watching this, can you type your answer into the comments below? The answer is that liquidity has been sucked away by gold. I've shown this chart many times on TradingView, but here's a chart that I found by one of the research groups, and they've done a better job to outline what I was talking about. So basically, we see this gold line is gold, duh. Orange line is Bitcoin, of course. So we see basically gold makes a move. This is 2016. Gold makes a move, right? Then Bitcoin makes a move. Then gold makes a move, parabolic top. Then remember, gold goes down, right? Money flows, rotates into Bitcoin. Gold makes a parabolic move. Gold goes down, money flows into Bitcoin. Gold makes a parabolic move. Money leaves Bitcoin, and money flows, rotates into Bitcoin again. This is historical. This is comparing 2016 Bitcoin bull run into 2017, 2020 Bitcoin bull run into mid 2021, and now we're looking at according to this chart, we will run into 2026 for Bitcoin. But this is like a 10-year chart, a 10-year chart. I will show you guys a much shorter 2-year chart. It doesn't just work on the 10-year level, it also works on the 2-year level. So now if we just look at the last 2 years, not the last 10 years, on a smaller daily level, this also works. This was the bottom Bitcoin at 2000 at 15k, 16k area. And if we look at gold, it actually bottomed first, right? 1 month earlier, and it started moving up, right? And then by Feb, which is, a few months later, Bitcoin then follows up and hits that high. We see the gap here. See that gap in space? That means gold moves first, then Bitcoin catches up, right? Gold moves first again, then Bitcoin catches up. And then here, if you remember very clearly, right, around late 23 to early 24, that move, Bitcoin moved first. That's because if you remember, BlackRock was going to list a Bitcoin ETF. So Bitcoin had very good news. So therefore, Bitcoin made its move first, right? Made its first move. But then gold, once again, in the second half of 24, makes this clear move up first, right? Makes this clear move up first. And that's when Bitcoin follows gold up again, right? And now we can see, right? Now we can see, basically, gold makes another move up, right? Another move up. And Bitcoin is basically waiting on that move, and Bitcoin needs to close that gap. This is why some people say, Bitcoin needs to be at 250k right now, because if we map this out, gold at 30,800 here is equivalent to, say, Bitcoin's 2250, 220k, here's 250k. So a lot of that liquidity, right, compared to this chart, this chart, actually, it's this chart, the first chart that I was referring to. Bitcoin should be at 2.5 mil, but it's not. What happened to all this liquidity? What happened to all this money that was printed? Well, the reason why is because that gap has gone to gold. See where gold is? Around 250,000. That's where gold is right now. So basically that's the explanation. And does that answer Ray Dalio's question? Now, Ray Dalio says very bad times are coming, and what he means is this. Let me show you guys. This is actually on a smaller scale. This is actually showing each cycle, but what he actually means is a grander 80-year cycle. So here, at least we can see what is going to happen in the next 2 to 4 years. These gray bars, they show recessions. This is recession of the year 2000.com crash, 2009 GFC. This is the very short crash of COVID 2020, and looks like we're due for another one now. How can we tell? Okay, what's the blue line? Blue line is Treasury bill yield, 13 weeks. In other words, it's basically where the market is guessing federal funds rate's going to be in the next 13 weeks, right? It's basically a 3 months guess on where the federal funds rate or the Federal Reserve interest rate is going. And when it goes down, it means the Fed is cutting interest rates. And gold is gold price here. So what does that mean? Let me just show you guys. Every time when this blue line, which is US short-term interest rates, goes down and gold goes up, we have bad recession, right? Interest rates go down, gold goes up, massive recession. Interest rates go down, gold goes up, recession. And what's happening here? Interest rates about to go down, gold is certainly going up. Why does this happen? Well, it's very logical. Think about it. Why would interest rates go down? Especially 13 weeks or 3 months. Why would 3-month interest rates go down? Because they're predicting that in the next 3 months, Federal Reserve is going to cut rates 2 or 3 more times, as they've indicated already. Why would they do that? Well, because recession's coming, because the economy is not looking good, because jobs are not looking good. So therefore, is it true? Is the Treasury bill market correct in that prediction? Well, something spooky is happening, and that is why gold price is going up. Gold price is going up. Gold price going up here, and gold price going up here. When gold price is going up, that means the big money, the whales, they're scared of something and they're hiding in gold. They're going to gold to hide, right? When they do that, that confirms something bad is going to happen. And indeed, rates keep on dropping, we have bad recession. Rates keep on dropping, we have bad recession. Rates keep on dropping as gold rallies, bad recession. And once again, this is right now, we're facing interest rates dropping and gold rising, recession or something worse than a recession is coming. That's what Ray Dalio keeps on saying. Now, and he says, Chinese proverb, a smart rabbit has 3 holes. So what does that exactly mean? Basically, well, China itself has basically claimed a much bigger slice of the world's gold trading business, right? What does that mean, right? What does that mean in finance? I know that most commentators like Jim Cramer have not bothered to tell you guys what this means, but basically China is asking all the foreign countries to store their gold reserves in China or in one of their vaults stored overseas, such as they're going to have one in Dubai, they're going to have one in Singapore, they're starting to build their one in Hong Kong right now. In other words, this is what the United States used to do, and this is how the petrodollar worked, right? After World War II, basically, United States asked all the countries that were smashed up, like Germany, Italy, England, to say, if you trust one person right now, you will trust me, that's the United States. Store your gold inside the United States Federal Reserve Vault in New York. And countries like France, Poland, they all sent, even China, they all sent their gold into United States, because that is to help facilitate trading between these countries, right? When say Poland exports something to Canada, then basically payments needs to be made, and it is done because the United States acts as a unbiased third party, and it stores the gold of both Canada and Poland inside the Federal Reserve's vaults in New York. So therefore, it can play that role. There's what you call collateral. If one side doesn't pay up, there's collateral there. That's how it used to work. And now China is trying to play that role. China is asking countries to trust itself and therefore to put its gold inside China. You might think that's crazy. Why would anybody do that? But already countries are starting to sign up for this. And, you know, part of it is because September the 3rd, I kept on saying in my Discord, September the 3rd equals shock and awe. There was a parade in China, and they showed a lot of their toys. And it was a toy expo, as I like to call it. And it convinced a lot of countries that China has this capability to be able to, and the security capability to protect the gold if it was stored there, right? Not like Iraq or Afghanistan could easily get hammered by the US. So therefore, China is trying to compete with the United States in that regard by building a second monetary system that no longer revolves around the US dollar. It revolves not around the Chinese RMB, but around a gold-based trading system, import-export, an international trading system. I'll say that again, not around the Chinese RMB, but around gold-backed trading system. And I'll show you guys one more piece of evidence of what is happening. This is the third largest, Morgan Stanley, third largest investment bank in the world. They're advocating for a 60-20-20 portfolio. If you ever worked in finance, or if you ever spoken to a financial advisor, where your parents who are trying to retire, they always say, well, we got to have the 60-40 portfolio. 60-40 portfolio means basically 60% in stocks, and they mean US stocks mostly, right? And 40% inside US Treasury bonds, right? It's simple, 60% in stocks, 40% in bonds. That's all it is. That's all that means. And this has been the case for the last 30, 35 years. But now, even this top American investment bank, Morgan Stanley, is saying, no, I think we got to go 60, 20, 20 split, right? What do they mean by 60, 20, 20? Well, they still mean 60% in stocks, equities, 20% in fixed income, which is treasuries, and 20% in what? In gold. 20% in gold. So you have the largest investment banks in the world saying, let's put half of your your bond portfolio into gold. Remember, it used to be 40%. Now it's only 20%. You put the other 20% into gold. That's what they're saying. Not Pablo, not financial advice from Pablo. I'm not saying this. Ray Dalio is saying 15% in gold, right? He said this all along. Okay, and here's Ray Dalio saying 15% of their portfolio should be in gold. And he's been saying this for like a year or two, and so has Pablo. If you're in my Discord, you know I've been saying this: gold, silver, platinum. And look how well platinum has done this year, right? For a metal that went to sleep and can keep going. So this is Double Line's Jeffrey Gundlach. That is the founder of the largest bond fund in the world. He holds $98 billion under management. Is basically the king of bonds. They call Jeffrey Gundlach king of bonds. United States Treasury bonds. And he says 25% gold position is not excessive. So he's saying that's not even excessive. He's hinting you could go higher. And this is the king of bonds, right? And this is the king of largest hedge fund manager in the world. He founded Bridgewater. And this is third largest investment bank in the United States, saying 16 stocks, 20 in bonds, 20 in gold. And China is now creating its own world trading system and asking all the other countries to do what they did with the United States post-World War II, which is put all their gold into the United States. Now China's asking everybody to put it into China, right? You might say, oh, nobody's going to care. Nobody's going to listen. Nobody's going to listen, Pablo. But what if a few years from now, Pablo gets this right once again? Pablo has made a lot of big calls correct lately. Yeah. Like the bull market in China and Hong Kong stocks, like the bull run in gold, silver, and platinum, right? Also, bull run in European weapon stocks, SP 500, NASDAQ, Bitcoin itself, and we're getting the crypto altcoin season now. Just not in all the coins that you hold, but in some of the coins. But what if Pablo gets this right once again? Think about that. Not financial advice. Thank you for tuning in. I'll catch you next episode.